Time being, stock more or less flattish. But Jay Bal of Cash Secures joins us on the show. Hi Jay, how are you feeling about the markets? The last 1 month or so, we have absolutely gone nowhere, which is not such a bad outcome because globally things have become so uncertain. Where are we headed though?
That's right, Nigel. When the markets go sideways after the move, that's a consolidation. Now, the fact that the markets went up vertically from April to May, and then it's going sideways, it's a bullish consolidation. So there is little doubt over there. But with the short term, what is not completely clear is that did the Friday's low complete the short-term consolidation, bullish consolidation, or is there one more lower low? If the markets don't go below 24,300 support, I think the market could rally straight away above the June 11th high and then rally much quicker to all-time highs. But if the support of 24,300 were given, the market would drop to about 23,500. And then once again, the path to 29,000 from a 6 to 12 months perspective, in both these cases, in my opinion, remains intact.
Got that. In terms of, just get the stocks out of the way and then we'll get into other stuff which is moving around. Jay, what are your trades?
I have two positional calls, Prashant. The first is on ABB, again from the capital goods space where I'm quite bullish. ABB has already broken out, but the pullback recently is a bullish consolidation. So I don't think that the stock is likely to drop below 51.90. I'm anticipating the stock to cross somewhere about 7,400, if not, retest the all-time high. So now I'm being conservative. I'll assume it's going to be just a corrective rally to 7,400. The second stock is a conditional trade on TCS. If the sector rotation that's been happening in the markets is likely to spill into the IT sector, which is currently seeing a bounce already. If it is more than just a counter-trend bounce, I think TCS would be the candidate. About 35.50, TCS would complete an inverse head and shoulders pattern, and a stop loss of 33.50 would be essential, and that will lift the entire IT sector. So wait for the stock to close above 35.50. That will only then it will complete the inverse head and shoulders pattern. Until that, the pattern is complete. If the stock were to drop below 33.50 before 35.50, then this setup is invalid.
All right, Jay, the most talked about asset class in the last few sessions because of the geopolitical tensions has been crude. I think you had called out, right, that crude is likely to bounce from the recent lows. It's at around $74 per barrel mark. Where is it headed? Where does resistance come in at? And also the other asset classes, dollar index. In uncertain times, you normally see the dollar index strengthen, which actually this time around hasn't happened. Where is that asset class headed?
Yeah, crude. We've been pointing out for crude to complete a double bottom and rise to $78 per barrel, and that's exactly the high it registered yesterday. And I think in the current run-up, the run-up of crude is done. I don't anticipate it to exceed the January high of 80.77, and I'm anticipating it to retest the April low. If the January high value exceed, then it'll signal that there's a major uptrend already underway. And we've spoken about this in my personal visit to CNBC studios. That from our 12 months to 18 months perspective, I'm anticipating crude to rally to about $170. So that will signal that it's already underway. I don't anticipate that to be the case. I'm anticipating one more retest of the April lows. When it comes to dollar index, the long-term supports are about 96.5, 95.5. There's a reasonable possibility that the low it registered a couple of days ago, that could be a low. Still, evidence is pending. If that is the case, I'm anticipating the dollar index will rally to somewhere about 103, 104 as a short-term bounce.
Okay. I got that. So near term, Jay, on oil, on Brent, what's the view?
Near term, you can, if you are very aggressive, you can place a stop above $78 and go short. It's a very aggressive trade, not for conservative trades. I'm anticipating a retest of $55 from a 6 to 8 weeks time frame. Time frame is slightly approximate. So I think the rise due to geopolitical tensions, that's done for the moment. So there is a pullback coming through for Brent. It may or may not break the $55, but it's proceeding towards that direction. We'll have more evidence as the commodity progresses.
Okay, 6 to 8 weeks in the 50s zone, basically, broadly, right?
Yeah.
And if that has to happen, then all this has to cool down. I mean, the actual real conflict also has to cool off. That's maybe another way to look at it. Jay, stay with us. We're going to take a quick commercial break. I mean, you know, if you're a trader in the West, and you are a trader in the West, actually, you were in London. Somebody would have invented some algo or something, right, to track all these comments, because he's the main mover.
That's right. That's right. I mean, see, the impact. I trade the Nasdaq quite frequently. In fact, I do it every day, and I do it on the 1 minute time frame. So the impact of his comments don't last beyond a few hours. So if you are such a micro trader, you need to have an algo, and they do tend to have a material impact. But I'm sure some algo traders have developed such trades. But the trend is supreme. Even in that 1 year, 1 minute time frame, if you are having a higher time frame objective from a 15 minutes time frame, it still doesn't have major impact. The comments tend to have an effect in the direction of that trend. So there are algos that's running and they're working, and they try to fade after a few hours.
So, what is that? Taco.
That's right.
Taco markets, taco traders.
Yeah.
Taco
and Mako.
What is Mako?
Musk also chicken soda.
Okay. Is that one? I didn't know that. Okay. Anything else on your macro dashboard which warrants attention? We talked about oil. Yeah. Anything else?
The most important thing is the US 10-year yields, Prashant, and that's been stuck in a range, and it's stuck between 410 bips and 466 bips until I'm watching for a breakout on either direction. And there have been specific comments that the bond market would crack and things like that. So watch 466 on the higher side. That'll signal a crack. If it were to break below 410 on the US 10-year yields, that'll signal bullish bond market and bearish yields.
Okay, all right. Stay with us, Jay. I think post market as well on markets forward. We have a few questions.